Welcome to The Explainer. Today, we're diving into the absolute gem that is Peter Lynch's legendary book, One Up on Wall Street. And his big idea, the thing that really changed the game, it's that your greatest investment tool isn't some super complex algorithm. Nope, it's your own everyday experience.
So let's just kick things off with a question Peter Lynch himself might ask you.
And the answer is a big, fat no. A stock has absolutely no memory of your past wins or your fancy degrees. It only responds to one thing, and one thing only: whether you actually understand the business you're putting your money into right now.
All right, so let's tackle a huge myth that most of us kind of believe, that Wall Street is this exclusive, members-only club, a world so complex that there's no way an average person could ever break in.
Think about it. The pros on Wall Street, they're just buried in these crazy complex models, and they are totally chained to quarterly pressure. But Lynch, he argues that your biggest advantages are your freedom from all that pressure and just your plain real-world common sense. You get to see things they simply can't from their desks.
And this is exactly where the legendary fund manager Peter Lynch comes into the picture. He looked at all that perceived complexity and he offered a solution that was, radically simple. His whole philosophy, it wasn't about trying to find the next genius CEO or some revolutionary new tech. No, it was about something much, much simpler. Finding these durable businesses that are so straightforward, they can actually withstand a few mistakes and still thrive.
So instead of trying to predict the future from behind a Bloomberg terminal, Lynch literally walked through shopping malls. He was like a detective on the ground, paying close attention to which stores were always packed and what products people were really buzzing about.
And right here, this is the absolute core of his entire strategy. Your life as a consumer, as an employee, as a neighbor, that is your secret weapon. Because you live in the real economy, not inside a spreadsheet.
A perfect example of this actually comes from his own life. The tip that led to one of his biggest wins didn't come from some high-powered analyst. Nope, it came from his wife, Carolyn. She just noticed a new brand of pantyhose was flying off the shelves at the grocery store. She saw a real-world trend taking off right in front of her. And that simple observation reveals a process, a repeatable process that anyone can use. First, you just observe something interesting in your daily life. Then, you investigate a little just to make sure the company is financially solid. And finally, you get the chance to invest before the pros on Wall Street even catch on. You know what happened with that Legs investment? It became what Lynch famously called a 10-bagger. A stock that goes up tenfold in value, all from a simple conversation in a supermarket aisle. Incredible.
So the key takeaway here is just that these opportunities are literally hiding in plain sight all around you. At your job, in your hobbies, in your shopping cart. You already have an information edge just by living your life. But hey, spotting a trend is just step one. Lynch was absolutely adamant that you must understand the business you're buying. His rule of thumb was pretty simple. If you can't explain why you own it to a 10-year-old in 2 minutes, you probably shouldn't own it. And to help with this, he created this really simple framework to avoid making those critical mistakes. Like expecting a giant company to grow like a tiny startup. He sorted all stocks into 6 very distinct categories.
Now, this slide right here is probably the most practical tool in the entire book, so let's just spend a second on it. Lynch's framework is just brilliant because it turns these abstract stock tickers into characters you can actually relate to. So take a look at the slow growers. These are your big, established companies. Think of them like a hardworking, middle-aged person. They're reliable, probably paying you a nice, steady dividend, but you're not expecting them to suddenly go out and sprint a marathon. Then you've got the fast growers. These are the teenagers in a growth spurt. They're small, aggressive companies growing at an absolutely incredible pace. Huge potential, for sure, but they're also super risky and volatile. And then there are the cyclicals. These are companies whose fortunes rise and fall with the economy, kind of like an artist who's either feasting or fasting. Just knowing which category a stock belongs to is so critical because it tells you exactly what to expect and, maybe more importantly, when to sell.
Maybe Lynch's most important lesson isn't even about what to buy, but actually how to behave after you buy it. He realized most investors fall into the exact same psychological trap: we cut our flowers and water our weeds. What does that mean? It means we sell our winners way too early and we hang on to our losers for far, far too long. So why? Why do we keep falling into this self-defeating pattern? Well, it all comes down to 2 very powerful and very human emotions. It's this internal battle, right? With your winning stocks, the fear of losing your profits, it just makes you want to cash out too early. But with your losing stocks, it's a misguided hope for a comeback that makes you cling to a mistake. And that's exactly how we end up selling our best performers and holding on to our worst.
So what's the fix? Well, Lynch's solution is brilliant in its simplicity. He says you need to create an emotional anchor for yourself before you even invest. That one-sentence thesis, that becomes your North Star. It's what's going to help you separate the market's day-to-day panic from a real fundamental change in the company's actual story. This chart shows you exactly what he means. You see those small up and down bars on the left? That's just short-term market noise. The real story, the melody you should actually be listening to, is that giant bar on the right. That represents the long-term growth of the business itself. So, what's the ultimate takeaway from all this? It's that you really don't need a Wall Street address to be a great investor. In fact, your distance from it, well, that might just be your greatest strength.
Because you see what's happening on the ground, in your office, at the mall, in your own neighborhood, and that gives you an information advantage months, sometimes even years, before the professionals on Wall Street even notice.
So as we wrap this up, just ask yourself this. What product, what service, or what trend are you seeing every single day that Wall Street is still ignoring? Your journey to finding that next great investment, it starts right there.